Welcome to episode 2 of Tricia Talks, and again we have Amy Lott with Main Street Home Loans with us, and today we want to talk a little bit about the home buying process from a loan standpoint. What's going to happen in the mortgage process and what you need to know. Hi again, Amy.
Hi, thanks for having me again, Tricia.
So Amy, if you could kind of walk through the loan process with us and the different steps and how long it takes, and just give us more information on that so we know what we're doing.
Sure. So once we get a buyer that is ready to go, pre-approval letter, you found them a home, you're under contract, the next step is really making application. So that is making sure I have all of their updated income and asset documents. I've sent them and reviewed their mortgage disclosures. So I have that file ready to go to processing. So processing would be our next step. At Main Street, we do have local in-house processing, which is nice. The processor then takes the file and does things like verifications of employment. We order in the appraisal, we order in the title work with the attorney. And then once the processor has reviewed all these documents, then it's actually ready to get in line to underwriting. The underwriter is who reviews everything and issues the formal commitment letter. A commitment letter is your formal approval letter.
Okay. So talk to us a little bit more about underwriting. Like, what are the underwriters looking for? What are some of the things that we want to keep an eye out for?
They're looking at many different factors, but it kind of boils down to they're looking at a buyer's ability, their stability, and their willingness to repay debt. So the ability would be reviewing their employment history. Normally it's the last 2 years. Where have they worked? How long have they been there? Stability is the income consistent? What are the debt to income ratios? How are they managing their bank accounts? Do they have reserves, savings? And then willingness to repay is really their payment history as reported on the credit report. What is the credit score? When you speak with a local loan officer like myself, we've been doing it a long time. We know the ins and outs of what underwriters are looking for. This is why it's important to speak with a local loan officer like myself who knows the ins and outs in different loan programs. It's important that you work with someone that's very familiar and understands the underwriting guidelines.
So Amy, during the loan process, is there anything that buyers should keep in mind with regard to their credit, keeping their balances low or doing new purchases, or what kind of recommendations do you have for that?
Yes, it's very important that the buyer's employment and credit profile not change from when you make application until the day of closing. So this means do not change your jobs, do not quit your job, do not obtain any new credit. So this isn't the time to trade in your vehicles or finance furniture or apply for credit cards. You want to keep everything the same. You can keep obviously saving money, but be careful. We don't want to see any large cash deposits. Know that any money coming into the bank account we have to source.
Okay. And what about the time frame? Like, how long does this whole process take?
It kind of very much is specific to the loan program.
Okay.
Typically in a normal market it takes about 30 days. Sometimes when volumes increase it might take a little bit more just because of the volume of a lot of the third parties, how long it takes to get appraisals and your inspections and title work done. But it's usually a good time frame between 30 and 45 days.
Okay. Thanks for checking out this episode of Tricia Talks. I'll see you next time.